Hey everyone, and welcome back to another video for today. So you might have heard, maybe not, and that's completely fine because at the end of the day it doesn't really matter. There's this big debate going on whether or not SoFi is a tech company. Does it deserve a tech multiple? I don't know what that actually means, but fine. SoFi is a fintech company, just like New Holdings is a fintech company. I assume Square Block is a fintech company, Affirm, fintech company, Robinhood, fintech company. Although each and every one of those businesses can be called something else. Now, each and every one of those businesses is also getting a different multiple from the market. Why is that? Well, some of these businesses are doing better than the others. Some are growing faster than the others. Some are more profitable than the others. Some have higher margins. Some have more momentum. Some have more outspoken CEOs. And the list goes on and on and on. There are plenty of reasons why a stock on the stock market is getting a higher multiple or is getting a lower multiple, right? Why is Google Alphabet, one of the best businesses on this planet, not getting a high multiple compared to an Apple, for example, even though Google Alphabet is growing faster than Apple, right? Okay, so SoFi. There was that debate yesterday on Tanner's channel, Chris' channel, Amin's channel, whatever, everybody's channel. I wasn't invited, so thank you very much for that. There are two camps. One, the skeptics, whether or not SoFi is a tech company, and the other one, well, Tanner and Chris on the data-driven side of things, Chris from data-driven investing. So they were on the side of SoFi is a tech company or should maybe get a higher multiple, but not because it is per se a tech company. No, usually you get a higher multiple by the market because you deserve a higher multiple because your business is probably getting stronger and stronger. You are growing faster than the market. In this case, not just faster than the market, but also faster than a lot of the other competitors, right? If we're saying that SoFi is a bank, well, show me banks that are growing consistently 30% year over year. You cannot show me any bank that grows this quickly. Correct? Correct. Thank you very much. So let's go over a couple of points that were mentioned here. Again, at the end of the day, it doesn't really matter, right? Oh, the market's perception. What does that even mean, the market's perception? Has the market never been wrong before? Has the market not been wrong when Robinhood was below $10? And I was, by the way, talking about this, but nobody wanted to hear. Okay, maybe I should have hyped it up a little bit more and I would have gotten more attention. But Robinhood under $8 didn't make any sense. Didn't make any sense. Oh, but the perception. Who cares about the perception when you look at a business? The same can be said, and the same has been said on this channel as well, about hims and hers when it was closer to $10. The same has been said on a lot of channels about Palantir when Palantir was below $10, right? We were saying, oh, the market doesn't understand the business. The market doesn't understand what this company is going to do, even though Palantir's business was not really doing well for a while. But, oh, the market's perception. No, we were looking at a business. So what? Sometimes we can look at the business, but other times we have to look at the perception and how a CEO speaks. And maybe the CEO does get on my channel and that's why I'm hyped up. Or maybe I can get to a company's event and that's why that's great and that's why the stock should go up. No. Okay, great for my business, great for me, right? If I can get every CEO on my channel, great. I'll make more money because I'll get more views. But from an investment standpoint, it doesn't really matter. It doesn't really matter. If the business does well, if the business is every metric that we're seeing goes up and to the right, I couldn't care less if the CEO never tweets again, if the CEO never does interviews again, or if there are no product events. I couldn't care less because I know that if they're doing their jobs, if every business metric does go up and to the right, well, my investment will probably be a good one. Maybe not today, maybe not tomorrow, but eventually, as we've seen time and time again, the market does figure it out, right? Palantir was struggling for quite a while, the stock and also the business. But suddenly it clicked, right? It clicked because the business was starting to do better and better. Okay, yeah, they started to have AIPCon, they started to have boot camps, CEOs very outspoken, but you could have had all of that, but if the business did not show reacceleration, if the business did not show growth, there is no way in hell this thing would have been worth $300 billion. Same with Robinhood. remove all the events, right? Even though the announcements during the event, oh, you can now get cash delivered to you. wow, tremendous innovation, bravo. No, the stock is up because a lot of the metrics from that business are up as well. Although there is some volatility to this business. We'll talk about that in a second. But essentially, I don't care about the perception. Oh, I have to look good for the stock market. No, do you want to look good or do you want to do good and be good? That's the big difference here. And especially with a stock like SoFi, which again, SoFi has a bank, so it cannot do whatever it wants. It has to follow a set of rules, right? SoFi's crypto business did not stop to exist because SoFi decided it shouldn't exist anymore. No, SoFi was actually operating with one hand tied behind its back for multiple years. And yet, this company has grown over the last couple of years faster than the market, much faster than a lot of its competitors. So imagine what it can do when it doesn't have headwinds, actually when those headwinds are turning into tailwinds. Now, yes, I'm not ignoring the tech platform side of the business, the Galileo side of the business. No, I'm not ignoring that. I will talk about this in this video. So let's go on with it. I'll show you a couple of, points that were mentioned, and then let's see if those make any sense. If you enjoy this type of videos, hit all the buttons, especially the subscribe one. Really appreciate that. All right, so the skeptic side of this debate, and by the way, Steve still bullish on SoFi, and I do think he has position but options for SoFi. So of course, if the stock goes up, both of them are going to be quite happy. So claim number one, traditional tech companies sell software, create hardware, or are in semiconductors. Their core business is IT related. SoFi, despite using technology, is fundamentally a finance company. Correct, right? There is no debate there. Robinhood gets a higher multiple due to higher operating margins versus SoFi and faster recent revenue growth, with crypto contributing significantly to Robinhood's financials. SoFi's revenue source, lending, financial services, classifies it as finance. Its tech platform, segment Galileo, Technisys, has the lowest margins and doesn't significantly contribute to profit, which is necessary for a tech classification. The market values SoFi like a traditional bank based on tangible book value. Here again, you can have that debate whether or not that makes sense, because show me another bank that is growing as quickly as SoFi. You cannot, okay? You cannot show me. SoFi is growing as fast as a tech company. Again, the market gives you a higher multiple, a higher premium usually on the growth rates, on how fast you can grow, how predictable, how stable your business is, and how profitable you are, plus, of course, margin expansion, etc., etc. Yes, it's true that in some cases, maybe even a lot of cases, especially during a bull market, the market puts an even higher premium on hyped up companies. Yes, that is also true. Then, Anthony Noto isn't as inspiring as other tech CEOs, for example, Alex Karp or Vlad Tenev from Robinhood. He doesn't do product events or share audacious goals. Noto needs to be more public-facing and transparent about the roadmap. So again, here we're talking about the perception of looking inspiring, the perception of, we're going to hype up products that, let's be honest, are normal products, right? There's no reason why SoFi should be doing product events if the products that they're announcing aren't groundbreaking. No, the products that they announce, that they release, should be making your life as an investor, as someone who wants to get its money right, easier. That's it, right? That's it. But what I do think is happening, especially in the background, is that they do have presentations, especially when they talk about their tech platform, especially when they want to sell that to maybe traditional financial institutions. Then there they will probably show what you can do if you build on top of our tech stack. Okay, maybe that's something that they can show us in public. But again, it's all about perception here. Moving on, SoFi should disclose monthly active users as a measure of engagement, similar to other tech companies. Not doing so raises questions about actual user activity beyond basic banking functions. Again, okay, would I like to get those? Of course, the more metrics, the better. But is it so important? No, right? Let's say you get those metrics, right? You get those metrics, but revenue doesn't grow as fast. Who cares, right? Who cares? I look at what the business is doing. And clearly, as you will see, the business, especially here members, have been doing incredibly well. Now you're going to tell me, yeah, but out of the 11 million members, how many of them are actually active every month? Well, you know what? It actually doesn't matter, right? It doesn't matter because SoFi's model is not built around, oh, you've been active on its app every single day. Robinhood is. Robinhood needs those transactional-based revenue. SoFi does not, right? All the other institutions, the older one, are generating billions of dollars. And yet, you don't have to log in each and every day. No, you don't. Because there are some segments. Same with Robinhood, by the way. Robinhood is diversifying now because it noticed actually, oh, maybe during a bear market, we will not be doing so well. By the way, Robinhood, monthly active users, still 33% lower than its peak. So why isn't the stock lower? Well, why isn't the stock lower? Look at this. Average revenue per user is up quite significantly. And this is, of course, a more important metric, especially as an investor, right? Because are you making more money per users? Yes. Okay. So fine. We wish you would have had 21 million, but we'll take 14.4 and almost 3x ARPU since the bottom. Then purely looking at the business segments, right? We know, okay, lending revenue, financial services, not as sexy as it sounds. And then you have the tech platform, and that, of course, should have been the AWS of fintech, should have given SoFi the tech multiple. But again, no. You get a tech multiple, which should be called a growth multiple, because you are growing much faster than the market and much faster than your peers. I'd also want to note that Anthony Noto talked specifically about the tech platform and why we should expect an acceleration in growth in 2026. There are 10 deals. Now, a couple of them might not get signed, but right now there are high probable deals. There are 10 deals that will produce revenue in the first quarter of 2026 that did not produce any revenue in the first quarter of 2025. That has been a long time since that happened, so I'm super excited about what the team has already accomplished and what we're about to roll out. So again, it's not happening right now, but clearly it's going to happen in 2026. And markets are forward-looking, not backwards-looking. But I guess, again, they should have done crazy events, so the perception of this company would have been better, but the underlying issues have not really changed. Moving back to the business itself. Here, you can clearly see that SoFi, despite a lot of headwinds, has been growing consistently each and every year. And then even more recently, you have the financial services segment, which is becoming 50% of their business and will become much more than 50%. This is a high growth business, higher margins. Of course, here you have the loan platform business, which is growing extremely rapidly, fee-based, less risk. I mean, if that's not enough, then I don't know. If we look at Robinhood, Robinhood clearly here goes up in cycles. Well, bull cycles, bear cycles, but it definitely benefits from high interest rates, right? Look at how much revenue they generate here, net interest revenue. Look at how much revenue they suddenly generate from the cryptocurrency business. Now, what happens if we enter a crypto winter? Goodbye, $200, $300 million in cryptocurrency revenue. We don't know what's going to happen there. So the market is willing to pay a higher multiple on a business that clearly is less predictable than a business that has been doing very well, no matter the macro situation. And I'm talking like this as a Robinhood bull that was bullish since $8 when nobody wanted to touch that company. And the comparison can continue here, right? You can look that since Q4 2020, total revenue, SoFi has grown that at a compound annual growth rate of 45.4%, Robinhood 33.4%. Of course, again, when the markets are very bullish, when people trade stocks each and every day, trade crypto each and every day, which is a high margin business as well, which will help SoFi. Of course, it will outperform for that short period of time. But would you rather have these yellow bars go up and to the right consistently, or would you rather have the blue bars where, well, sometimes you will experience a huge drop? Me personally, I'd like the yellow bars way more. Let's continue with the last point here. SoFi's technology platform segment, Galileo Technisys, has the lowest margins and isn't the primary driver of revenue or profitability. For SoFi to be a tech company, this segment needs to dominate. Well, okay, for SoFi to be a tech company, this segment needs to dominate. For SoFi to be maybe considered as a tech company, this segment should be doing much, much better. I agree. But again, two different things here. You get a high multiple, not because you're a tech company, you get a high multiple because you're growing faster. And here are the counter arguments from Tanner and Chris. So on number one here, the comparison traditional tech company to a financial services one or financial company, the definition is a sliding scale. SoFi is fintech, a financial company leveraging technology for efficiency, higher margin, and better customer experience. Technology enables everything SoFi does. A tech company, or one deserving a tech multiple, is a digitally native business leaning more on tech tools than traditional institutions. Correct? I think so. Moving on. Skeptics' revenue numbers for SoFi are skewed by one-time events. SoFi's adjusted net revenue shows stronger growth, while Robinhood currently has greater operating leverage. SoFi's consistently improving incremental margins suggest future higher overall margins. SoFi has shown more consistent long-term growth than Robinhood, as I've just shown you. SoFi is showing strong, consistent annual revenue growth, over 30%, despite headwinds. Its financial services segment has excellent operating leverage and improving contribution margins, as we've seen in the last couple of quarters. The market is currently mispricing SoFi. Its trajectory will lead to a higher valuation, similar to how Palantir was once undervalued, misunderstood, although the difference here, again, between a Palantir and a SoFi is that the Palantir actually did struggle for a while. SoFi is not struggling, has not been struggling at all despite all the headwinds. I'll skip the communication part of it because this is the most ridiculous claim here. Again, you're talking about either data-driven investing or hype investing. Plain and simple to me. Then, monthly active users, not as relevant for SoFi's business model, where revenue can be generated without constant app interaction, right? The beauty of such a business model. Metrics like average revenue per user are more telling, as I've just shown you with Robinhood. Plus, monthly active users, of course, is a nice metric, but it's not that important of a metric for every company out there. By the way, an example here, Netflix will not show us anymore the subscriber count each and every quarter. They'll tell us when they reach major milestone. Why is that? They explained. Because it is not an important metric for them anymore. What's more important is the profitability side of things and the revenue growth. That's it. And so is Netflix now not a tech company anymore. There are probably other big tech companies out there that do not tell you monthly active users, right? I don't even think Amazon, do they tell you how many monthly active users they have on their website? If they do let me know in the comment section below. But I don't think they do. Salesforce, I don't think they do. Plenty of others there, I don't think they do. Tesla, for example, doesn't even tell you how many people have FSD enabled. That's not a tech company anymore because we don't have monthly active users. Okay, then on the claims that, oh, you need product events and this and that to be a tech company. No, you don't. No, you don't. Okay? Plain and simple. Another couple of things. If we look at revenue growth for SoFi and the expected growth by the market expects SoFi to only grow 22.4% in fiscal 25. The market has been consistently wrong with SoFi when they gave us, the guidance. Then in fiscal 26, only 18.9% year-over-year growth, and then just 15% in fiscal 27. So 22, 19, 15. For Robinhood, that's also 22, 16, and 8. So currently the market is actually expecting Robinhood to grow slower than SoFi in the next coming years. Now, of course, again, it's about also margins, margin expansions, and that's why you're getting a higher multiple. But purely looking here at growth rates, clearly the market is still expecting SoFi to grow faster than a Robinhood. Now, here as well, I think the market will be wrong. I think Robinhood can grow faster than those numbers, just like I just said, that SoFi can grow faster than the numbers provided here. Then lastly, when talking about, Noto is not inspirational, he's not talking about long-term target, well, he does, right? That top 10 financial institution, and then he said top 15 company by market cap as a whole. Okay, there is still a long, long way to go to reach that. But he did float the idea of reaching maybe 50 million members. That's quite a big target, I'd say. then they'd still target mid to high 20% revenue growth. They're still targeting 55 to 80 cents EPS in 2026, and they've said that they're on track to reach that. Not only that, EPS growth for after 2026, what did they tell us? Over 20% or so? Imagine growing 20% EPS for the next couple of fiscal years. I don't see many companies do that or tell me that that will be possible. Now you might say, oh, but maybe that will not happen. Well, so far, what SoFi has told us has happened, and it has actually done better than expected despite the headwinds. You might also say, oh, but SoFi should listen to their customers more because, well, the customers want crypto, they also want options, and the fact that now they're getting back to those things means that clearly they do want to be more customer-centric or whatnot. First of all, they had already a crypto business. It was taken away from them. Second of all, options, level 1 options, clearly, because they have the data, right? Okay, it can bring more people in, it can bring more activity in, for sure. But if it really was that important, it would have been a higher priority. Maybe it just isn't that important. And again, the difference here between a SoFi and a Robinhood is that Robinhood needs you to be very, very active on the platform. SoFi does not need you to be very active on the platform. Of course, Robinhood has been diversifying more and more. But to me, this whole conversation doesn't make much sense, right? Clearly, these two companies operate differently. One, a lot of hype. Clearly, you cannot deny it. A lot of hype. They need the attention. They need the activity. The other, no, not so much. Not so much. And without it, they've been doing very, very well over the last couple of years. And they will do very well for the next couple of years. Yes, okay, stock-wise, one has gone up tremendously over the last 12 months. The other has gone up, but not as fast as Robinhood. And so, is SoFi a tech company? No, SoFi is a fintech company that is growing very fast, becoming more and more profitable, does deserve a high multiple. I do think that the market is completely wrong on SoFi, and that's it. I think Anthony Noto is a great CEO. I think he knows exactly what he's doing. Would I love him to share more information? Would I love him to come on our channels? Yes, of course, because it benefits me. Does it benefit the stock per se or the company? I don't think so. Honestly, I don't think so. Would I like monthly active users, activity rate? Yes, of course. The more data, the better. It's not just for SoFi, it's for every other company out there. But the bottom line here is that me as an investor, I invest in a business, and if the business is doing well, all of the external things, all of this perception, hype stuff does not matter. Doesn't matter. Because eventually the market will figure out that this is a damn good business that is growing much faster than your traditional banks. So that's about it. Sorry for the long video, but I guess now I could say in the title, I couldn't stay quiet longer about SoFi or whatever BS title we will use. Anyways, that's all I've got for you right now. Like, subscribe, all of that, and I'll see you in the next one. Bye-bye.